Hey guys, David here. Welcome to Digital Outlook, where you're gonna find the best community in all of crypto. In today's video, what's coming next, most people are gonna miss. So guys, without further ado, why don't we get to it? So guys, we all know that in this space right now, it is literally fear on steroids. And in fact, because of all of the global instability that is going on, you are watching the fear and greed index in this space absolutely teeter on that fear margin. And a lot of folks that have held on to their positions for a significant amount of time have literally reached the breaking point and are absolutely capitulating. Now, most of these folks have not been around long enough to truly see how these markets move. And one thing that they are absolutely, totally not thinking of is how the global macro environment truly does affect this space. And guys, one of the biggest indicators that we have ever had when it's come to any bull run that this digital asset space has ever experienced is the DXY. And guys, right now, we are literally on the verge of watching the DXY fall over a massive cliff. And there is a reverse correlation between the DXY and this space, and in a powerful way. Now, guys, just check this article out right over here and look at this title. Debt spiral could trigger a dollar crash and boost Bitcoin, Ethereum, and XRP prices as institutions eye critical hedges. Just listen to this. After an initial surge at the beginning of the year, most digital assets have lost momentum, with Bitcoin being down 3.5% over the past month and over 62% year to date. Similarly, altcoins such as XRP are up in the year, but down significantly over the past few weeks. As the US faces a debt death spiral of, and get this, $33 trillion. That is absolutely mesmerizing. Analysts from Jefferies have now cautioned that the Federal Reserve may have to resume its money printing, possibly causing the US dollar to crash and boosting the price of the flagship cryptocurrency as it competes with gold. Guys, we know already that the petrodollar is totally dead. We just have not had the funeral yet. I mean, you've got Saudi Arabia up there aligning itself with BRICS countries, and totally they're coming out saying, hey, we're dropping the US dollar, and they're selling their oil in other denominated currencies when way back in the 70s, hey, they had committed to keeping that in US dollar denominated sales. Well, guys, that is totally off the table. And beyond that, in this current environment with this whole geopolitical situation that's going on, they have got to turn on the printing press in order to, basically get the mechanics to fund what's going on out there. Now listen to this right over here. In a recent note, Christopher Wood, global head of equity strategy at Jefferies, called Bitcoin and gold critical hedges against the return of inflation, as G7 central banks will not be able to exit from any unconventional monetary policy in a benign manner and will ultimately remain committed to ongoing central bank balance sheet expansion in one form or another. Wood's comments come at a time in which the U.S. Federal Reserve and other major central banks throughout the world have been aggressively raising interest rates to rein in inflation. And guys, it is not working. We all know that. And listen to this. The aggressive rate hikes have led to the collapse of several institutions, including Credit Suisse, which was bought by UBS for about $3.3 billion earlier this year. Now, after boosting its balance sheet with massive growth during the bleepity bleep bleep thing and the mandated over it, the Fed started to reduce its bloated balance sheet of almost $9 trillion in the spring of 2022. The process of quantitative tightening often involves the central bank withdrawing money from the financial system and shifting the responsibility of new debt to the private sector. Now, analysts at Deutsche Bank have warned that the world could see a repeat of the 1970s stagflation era. In a note reported by MarketWatch, macro strategist Henry Allen and research analyst Cassidy Ainsworth Grace wrote, so, given inflation is still above its pre-DTD levels, it is important not to get complacent about its path. After all, if there is another shock and inflation remains above target into a third or even a fourth year, it is increasingly difficult to imagine that long-term expectations will repeatedly stay lower than actual inflation. Potential factors influencing such a shock could be the recent outbreak of the war in Gaza after the Palestinian militant group Hamas launched a multi-pronged attack on Israel, which led to its crypto accounts being frozen, and increased worker strikes along with potential weather patterns affecting commodity prices. If the U.S. faces a recession, the Federal Reserve may be forced to flip on its hawkish stance and start stimulating the economy once again with lower interest rates following the recent money supply expansion. Such a move, Wood wrote, is likely to culminate in the collapse of the U.S. dollar paper standard to the benefit of both gold bullion owners and also owners of Bitcoin. Bitcoin and other major cryptocurrencies like Ethereum and XRP have been attracting institutional interest over the last few weeks. As Crypto Globe reported, major financial powerhouses are collectively managed an astounding $27 trillion. Wow! Almost the total of the U.S. national debt in assets are making inroads into the world of Bitcoin and cryptocurrency. After a race to the list, the first spot Bitcoin exchange traded fund in the United States kicked off. In this note, Woods argued that Bitcoin has now become investable for institutions as custodian arrangements have made it an alternative store of value to gold. Guys, this is truly phenomenal. We see a collapse in the DXY and that inverse correlation, and you watch ETFs at the same time come out for Bitcoin, and we know that, hey, a rising tide raises all ships, and when Bitcoin starts to take off, it brings the whole ecosystem with it. And we are looking at the possibility of one of the biggest bull runs this space has ever seen, right at a time when the fear is off the charts, and most people, just because of that instability and uncertainty, are absolutely capitulating. And guys, it's my belief that they will totally miss it, and it will be one of the biggest regrets in my personal expectation that they will probably ever have. Now, guys, just take a look at this right here just to nail this home. Now, this is Dark Defender, and what he's showing us here is a chart of the DXY, and he is pointing out that every major bull run, when the DXY tumbled, this space literally took off. Now, listen to this. The dollar index and crypto bull runs have a strong correlation. During 2017 and 2018, the drop in the DXY started the bull runs for crypto. Like them, 2021 gave us another one, which caused XRP to jump to $1.96.6, so $1.97 basically. The US dollar has been rejected from the $1.06.95.2, and we cannot still say the B wave is over and the C wave will continue now. However, if this loosening of the DXY continues, just like in that article we saw, we can be sure the next bull run for crypto will be out the door starting the end of 2023. The DXY is up, crypto's down. DXY is down, crypto is up. So DXY can continue towards the B wave top around the $1.12 and try to suffocate crypto slightly more. But that's it. After that move, the DXY C wave will commence. The return of the crypto then will be immense with its volume and will create the golden era between 2024 and 2026. Guys, we are gearing up with what's been happening in the wide world and the money printing that has been off the charts. And eventually a payday has to come. I mean, when you see this kind of move in the DXY, you are going to see these kind of drops. And when those drops come, I'm telling you what, we will see a major, massive powerhouse of a move, in my opinion, and also in many other technical analysis. And I'm not a TA guy, but in my personal opinion, from what I've researched, I absolutely believe we are going to see one of the biggest bull runs that we have ever seen. Now, guys, just take a look at this article right here. XRP's bullish long-term outlook defying challenges, aiming for $7 plus. Just listen to this. One notable crypto analyst remains firmly bullish on XRP in a market characterized by constant volatility. Despite recent price fluctuations, JD, the analyst in question, has maintained an optimistic long-term perspective for XRP, with a bold target of exceeding the $7 threshold. JD's optimism is rooted in a meticulous analysis of XRP's weekly chart, which reveals an intriguing indicator: hidden bullish divergence on the RSI, the Relative Strength Index. Patience and ignoring the news is key. Let's take a step back and look at a more macro view. And that's exactly what we're doing when we're taking a look at articles like this. Now, he says the short term may look scary. Even with all these irrelevant news, the weekly chart still creating hidden bullish divergence on the RSI. This divergence suggests that XRP is poised for a significant upward movement. The weekly stock RSI reinforces this perspective by comfortably hovering around 7.66, well above the typical oversold threshold of 20. This indicates an attractive entry point for investors seeking to capitalize on the potential surge in XRP's value. Despite recent setbacks that have led to a 1.9% loss in value and a 1.79% dip in market capitalization, XRP displays a remarkable resilience. Notably, the digital asset maintains a daily positive trading volume of $792 million every day. Daily trading volume, imagine that. Supported by strong fundamentals, high will activity within the XRP ecosystem, and the favorable progress in the Ripple legal battle with the U.S. Securities and Exchange Commission are significant factors contributing to XRP's robust long-term prospects. Guys, when you see stuff like this going on and you're watching the correlation between the DXY and this digital asset space, and we are literally right now in a debt spiral that could more than likely trigger a dollar crash, and people right now, because of the uncertainty in the geopolitical wide world, are literally capitulating their positions. I'm telling you, what I believe is about to come is going to leave people floored, and most people that are capitulating now are absolutely going to miss it, and it's going to probably become one of the greatest regrets that they ever experienced. So I'll tell you what, guys, for me, my encouragement is get out there and research it as much as you possibly can and find out what are these correlations between the DXY, the dollar index, and crypto, and look it up for yourself, because I'll tell you what, what's about to come, I think, is going to blow the doors off of most people's expectations and literally leave people laying on the floor when this rocket ship absolutely takes off. So guys, with everything that's going on in this space, one of your top priorities has got to be getting your plan in place. And what our coaching program offers, that is where you and I can meet personally, one-on-one, one for 1 hour over Zoom. And during that time, I share with you our personal journey in that last bull run and what enabled Judy and I to experience some amazing financial success. I share with you the mistakes we made so that you don't have to fall into the same pitfalls we did. We take a look at your portfolio and make sure that it's balanced towards your goals, and we work together to develop your exit strategy. We can even get your assets off an exchange and onto a hardware wallet, along with delivering to you some amazing techniques that are really going to help you in this space. Now, the cost of that is $250, and if that's something that interests you, you write me right there at coaching@thedigitaloutlook.com and we'll get you all booked in. So guys, this is the video I have for you today, and as always, I truly hope that you enjoyed it. Now, many of you know I'm not a financial advisor, and this isn't financial advice, but if you found value in it, if you'd hit that like and subscribe, I'd appreciate it. And hey, don't forget to put your comments right down there in the comment section and hit that notification bell so that you don't miss out on any of our regularly released videos. So, in the meantime, and in between time, stay safe, be blessed, and I'll catch you in the next one.